first company is called VeriSign, which is specialized in cybersecurity. Like it's the largest digital certificate issuer, and it's also the largest domain registration company, .com. And also it has a pretty big payment division called VeriSign Payment Services. So I was one of the founding members for the VeriSign Payment Services. Basically, we built up the first generation of the US online gateway services. The name is called Pay4Link and the Pay4Pro. We signed up about 200,000 merchants, and at peak time we process about 10% of the US e-commerce volume. So then I think what happened is PayPal stepped in and acquired the payment division from VeriSign. So I kind of joined the PayPal San Jose office, and then I started my 5 years adventure in PayPal. So I think PayPal has a pretty big global presence, and the fundamental infrastructure for PayPal is the PayPal Digital Wallet, which need to support over 100 different countries and regions. So very important thing is for all the consumers and the merchants in those different countries and regions, we need to make sure there is a smooth, seamless funds into the wallet and funds out of the wallet. What that requires is we have to work with all the banks, financial institutions, card associations around around the world. So in US, we had opportunities to work with ACH. In UK, we work with BACS and the UK Fast Payments. Germany, we work with LBA, ETF. And then in Asian markets, and I think in Korean market, we also had a chance to talk to Shinhan cards, Kumin cards, and Hyundai cards, BC cards. And in China, we actually work with the largest card association, China Union Pay, to make sure we can support all the China Union Pay issue, the credit card, debit card in the PayPal wallet. So the whole Chinese community, they can go shopping around the world as long as the merchants support PayPal as a payment option. So being said all those, now here comes the credit-related part is, in year 2010, PayPal actually acquired a company called Bill Me Later. So Bill Me Later is actually the largest credit payment company in US. And the product for Bill Me Later, the beauty about it is all the consumer need to do, they just need to enter social security number and the date of birth. And Bill Me Later at the back end, they will do all the algorithm calculation and decide whether you are going to get a line of credit or not. So that's the credit issuing part, the internet space, which is already doing very sophisticated. PayPal spent $1 billion to buy that company. The original plan is when they bought the company, they want to take this model and apply to all those different countries and the markets. But unfortunately, and that's the time we saw the limitation of the internet in terms of how to do the credit vetting successfully and efficiently. 8 years after PayPal bought Bill Me Later, Bill Me Later still pretty much is operating in the US market. Even in UK, European market and Asia Pacific market, we actually don't see it running very well. So people always wondering, is there a better way to solve that problem? We can take that Bill Me Later model to the different part of the world. And another example is when I finished my project with China Union Pay with PayPal, actually I decided to found out a fintech company in Shanghai, specializing in providing a payment option to all those mobile gaming, PC games. And the product is called, it's also credit-based, it's called Pay Now, Pay Later. So it's for the end consumer, they just provide a very little piece of information, phone number and some other information. We are going to give them a line of credit that they can use to purchase game coins. Within 2 years, we kind of accumulated 30 million of user base and signed up over hundreds of merchants. But again, we're starting to face the same challenge. If we want to take this credit model we built up in China, build up in Shanghai, if we want to take it outside China, apply to a different region in other parts of the world, we found it, we never made it happen in any other single market. So that made me always thinking about, okay, there's something fundamentally wrong or fundamentally limited with the original internet way of thinking about credit issuing and the credit vetting. So I think that also is brought up my idea is I want to share with you guys like evolution of credit rating in the blockchain these days, how my view, and also would like to hear your guys, how do you think about it? What is the essence of identity? It's like something can be coming in very different formats. It can be driver license, passports, and also like if you happen to need to travel around the world to work in different places, you will get a work permit, you will get a residence permit, and I will share my own story in this with you guys. When I was doing my study like in Canada, okay, I have to apply for like green card in Canada. And when I moved to US to work in Silicon Valley, I need to start to apply for H1 visa and start to apply for green card in US. But the funny thing is like after all those years, if I want to go back to work in Shanghai, I still need to get work permits, residence permit. So all those things is very similar. I say, hey, what is the identity? So this is something like we just briefly covered about this. How are our identity managed? In like before the internet, everything like this pretty much is manually processed and manually recorded, and it's like DMV. If like you guys remember that movie a long time back, you go there, you need to get something done. It's really that slow. And it takes like all the paper file and find out something. But I think fortunately like then there comes like what we call is information management system that probably is going to process your data a little faster. I think in the last couple of years, what we call is the era of the big data. That's really when like people starting to maximize the power of internet and maximize the power of data collection. So if today, if you log on any like bank's website or you log on any like financial institution's website, there's a good chance like the moment you log on and there is already some service is already recording all kind of like from all the different angles of your user behavior. And there's already a company like Threat Matrix, 41st parameters. What they do is, it doesn't matter where you log on the website, they will come up with something called device ID. And that device ID actually is composed of like hundreds of like data dimensions based on your browser info, based on where you're logging, based on all those things, okay. So, being said that, so this is, and they can like do all those algorithms and the data calculation based on the data they collected. Is this a good thing or bad thing? I think on the good side is we realize internet has become so powerful, we can do all those things and collect all the data with just like milliseconds. Then the bad thing about it is really there's no secret about it. Whatever you are doing, whatever you are behaving is already recorded in the central database. Now, this is what's said. So from the manual paper process to the original like information management system, like even PC-based, and to the internet age, and to like big data, everything like developing so fast, so cool, and we just enjoy like all the efficiency and all like the cost is so low of doing business, but everything comes with a price. Then when we look at like what recently happened with the Facebook privacy breach, then we realize all those data, essential database, essentialized organization, they pretty much can do whatever they want with the data they collected from the consumer. And without consumer even knowing anything happened to those. And I think like it's actually, from the compliance and the regulation perspective, like the government is already responding to this kind of like internet company behavior. Like we saw in Europe, there is already like general data protection regulation coming out of like it's in use, and a lot of like the big internet company has to respond to that at a very huge cost. And then we actually read reports, some companies simply shut down the European operations because like there's no way for them to compile with that regulation. Or if they compile with that, there's no money to be made. So very similar thing happened in China is there was like a wave of buying and selling user data in the last couple of years with internet finance companies like is doing all those. And recently, I think it's also coming out very strict regulation what you can do with those users' data. Now, we saw like big data, AI, and internet, and they all developing so sophisticated to a stage, and it already causing like so many problems. And the government has to step out and say no, like you cannot do this anymore, and what we should do it right. So, is there anything else we can do from the technology perspective? I think this is actually a good answer. Like how can blockchain solve the problems of centralization, right? So talking about like the global accessible, and I think that's a different thing. Like the traditional credit betting, credit bureau couldn't solve this problem very well. So like you guys here who already like lived in Korea for a long time and built up a very good credit history, so you have some similar score like the FICO score in US. Let's see, probably it's already 800 something. But if you want to take that score out like to US and you say, hey, I want to apply for a mortgage, apply for a credit card, the answer is pretty much no. Because I can use my own experience. Like when I was studying in Canada, I actually already applied for my student visa. It's not like, it's pretty cool. I have my visa. But after I built up my credit history in Canada, if I want to go to US, and the first credit card I applied is actually declined. Or they said, like, I go to Bank of America. What they told me is, yes, we can give you a credit card, but it's only like $500 limit of credit card. And to make it worse, you have to deposit $500 US into a checking account to making sure you can get that credit card. So pretty much what that means is I have zero credit in US when I first moved from Canada to US. And so I worked very hard like in US, like for 9 years now I got my credit card. But the moment we moved from US like to Shanghai, I go to one of like China merchant bank. I said I want a local credit card. The answer is simply no. There's even no like secured credit card available for you. Okay, so that means that's something fundamentally in this like centralized credit bureau and the credit data society we have to solve. And luckily, I think that's something blockchain can probably really play a big role in. So this is a good example of like the first publicly verified blockchain identity in Swiss city of Zug. It also has a different name called Crypto Valley. And I think the cool service they just like launched in this city is actually in collaboration with a project called Uport. It's really giving back the ownership of the data back to the user. And all those, like every time like people need to access that user identity has to come from the user's actually approval. Now, we just talked about all the identity part, which is the fundamental piece of information and the infrastructure for the credit. Now we can look at what we can do about the credit. Is there anything we see from the blockchain actually can solve the problem I described at the very beginning about the bill me later problem? Can we do that? And also how to solve the pay now, pay later credit problem. Yeah, it's very similar like to what we experienced from the identity management. I think credit management, especially the credit issuing part. So before actually I talk about this one, I just want to step back a little bit because I was just answering a few questions during my interviews outside. It's talking about like, hey, how do you view blockchains replacing Visa, MasterCard, or the payment system? I actually have a slightly different view on this. I don't think like blockchain technology is ready to replace the whole payment system. Because Visa, MasterCard, and including like Alipay and those payment systems is much more scalable compared with Ethereum and Bitcoin in terms of scalability. So what does that mean is like when you buy your coffee or buy your grocery, I actually don't see there's a need that you need to have to use your crypto asset to pay for that. The fiat currency is very effective in that sense already. If you want to do the real-time like crypto asset settlement and clearance, that's actually not the strength of the current days of blockchain. In my opinion, is blockchain technology really these days he brought in the strengths is actually at the credit part. It's at the credit vetting and at the credit issuing. It significantly brings down the cost of the risk management and how we can do the credit vetting. So like we just talked about, with the internet developed so fast, and like all the internet company can collect so much data from the user side, but still like the company's problem with that approach is like, first, like we mentioned, is centralized credit assessment. That part make it, you are not able to make your credit score portable at all. And that's also because like lack of global recognized ID credit score. Because like no central bank is willing to share with each other's central bank about whatever credit history they have on file. So I think really it's important is also like the project we are working on, and what we are trying to build is give back like from a centralized identity management system to a like decentralized identity management system. It's like projects like Civic, UPort, and we also see like there's new projects coming out like Bloom. All they are trying to do is actually user actually really own their identity, and all the D apps when they are trying to access the identity info is actually coming from the user's approval for that. And talking about and all like decentralized protocol is in the sense like originally is all the banks like the issue credit cards, issue loans, issue mortgages, and based on like tons of information they collect, they decide whether they give you this or not. Once they give that to you, they track all those payment histories and they report all those user behaviors to the central bank of either like Korean, China, US. So you see each different like central bank of like each country, they will have a different copy of those like credit reports. I think now it's fine, like we probably have a chance is we can have a global ID in the sense is all the transaction history, if you made the borrowing, you made the credit issuing based on blockchain, they'll all be recorded on the blockchain. And all the DFs can access the credits on the blockchain, which is universally acceptable. So here, like, I just want to give you guys another example of why the internet has seen some barrier in sense of like how the efficiency is not just the only thing we need to solve. It's really we need to think about something else. So when people talking about the sharing economy, people are really getting excited. They think this is something give the power back to like the driver, give back to the consumer. They can choose whatever they want. But what really happened is by still you leverage the centralized like system. Didi at the very beginning claimed itself as like a really good role model of the sharing economy. But now, the moment he killed most of the competitors, I think it's already acting like a very centralized organization. Like drivers are always complaining about, and the consumer are also complaining about, and they actually don't do much about it anyways. And on the other side, we do see a different example, which we see like in the US, it's called like BitToken. It's working with a different project called the Global ID. And the goal of the BitToken is really to provide the utility of the sharing economy, but with the benefits of decentralization. So we really want to see like how this project grows, see like is this going to come up with a very decentralized like organization compared with what happened with Didi in China. So let's keep an eye on the progress of this project. Okay. So talked about all those like centralized credit, decentralized credit, and I think now we really have the chance with one is blockchain technology, the other one is actually with the appreciation of the crypto asset in the second half of 2017. I think this is really something becomes very interesting. You can really use the crypto assets even if you haven't built up your credit history yet. But now you have a much easier way to use your crypto asset as a collateral, and you can use that collateral and work with the financial institutions or intermediate banks to use that like to get mortgage loans, to get like credit cards, to get like cash loans. So I think that's something really is going to bring down the cost of like credit valuing, and even for younger generation, you don't have to wait for 3 or 5 years before like you can apply for a mortgage. But the moment you have your crypto asset, you can already use it as a very valid credit valuing and credit like issuing power to work with financial institutions. And our project fundamentally is trying to acting as a bridge between the crypto asset and the traditional financial institutions. And like our team is more like from a PayPal background, and our expertise is actually we build up the global banking partnership network around the world for PayPal based on internet technology. And what we really want to do with LIBRA Credit is we want to build up another global banking partnership network based on blockchain technology and acting as a bridge between the crypto assets and the financial institutions. So this being said, that decentralized credit represents opportunities. And I think like probably in a couple of years, I really hope by coming back to Korea and I will see like all the crypto community like members, they can actually use the LIBRA credit, the co-branded credit card from either like Shinhan, Hyundai, or like Booming or BC cards. And that means like all the underlying assets is actually crypto assets. Thank you very much.